Hi, welcome back to my channel. You may be aware of a recent talk that Michael Saylor had back in Nashville, in Nashville, the Bitcoin conference, and it was back in July, where he basically talks about a model that he created and he calls it Bitcoin24. In this model, he just lays out three different scenarios for base case, bear case, and bull case for the projection of Bitcoin price from 2024 up until 2045, which is around 21-year period. And he basically models the price and he applies it to different types of market participants, whether you are an individual, a corporation, institution, an indebted nation, or just a wealthy nation, and how if these individuals or if these market participants adopt Bitcoin and how much they allocate to Bitcoin, what could that mean for their future assets, and how much they will do well in comparison to just holding traditional assets. So he has a whole model on that, and he has it up on GitHub for everyone to see it and to see where all the calculations come from and to tweak it to their own needs, basically, and how they see Bitcoin themselves. And so I did exactly that. And in this video, I'm just gonna take this model, dissect it, and reshape it to what could be considered something as maybe realistic for someone like a regular person who's just starting as a business. And I also modeled it on the Lebanese government, which is an indebted nation, and what it means for the Lebanese government to adopt Bitcoin. And if it were to do that, would it be able to get out of its debt? So this is basically what this video is about. So I'm going to explain the model, reshape it, and talk about it. That's it. Okay, so first things first, in order to access this data, Saylor basically made it available for everyone to do so. So all you have to do is visit this GitHub page. I will link it in the description of this video, and you can simply download the raw file here. So I already downloaded it. So this is the file as it is. You can see it here. So I'm just going to read quickly here what this file is about and what is this project aimed at and what it actually does. So it is called Bitcoin24, and it says here that it's helping you drive Bitcoin adoption. So I think the main idea for Saylor to do this is to give us a framework to work with. Let's say you have a friend that wants to get into Bitcoin, and of course everyone, the new guys and even us, we are concerned about the Bitcoin price and what kind of appreciation potential it has. So I guess this is the intention of this project, of this model, and it's a 21-year macro forecast with micro models for Bitcoin strategy. So as you can see here, it's divided into 5 categories. So we have the normie category, the Bitcoin 10% category, the BTC maxi, the double maxi, and the triple maxi. So later on, while we are looking at this, we're going to understand what each and every one of these categories entails. This is a quick description of what this model is. Bitcoin24 is designed to simulate 21-year outcomes of various Bitcoin strategies tailored for individuals, corporations, institutions, and nation states. User can input their own assumptions or adjust the model to explore different scenarios. Saving the file will automatically update the scenario comparison chart in the micro models bottom section. For the latest updates and developments on Bitcoin24, visit the project's official GitHub. So it's pretty self-explanatory, and for any updates on what this project is and all the data updated, you can just visit GitHub. So here is just saying that this model does not concern with volatility, short-term volatility. It's more of a long-term outcomes of adopting a Bitcoin standard. It is the contributors of this project are Michael Saylor and 2 other guys that I'm not really aware of, but I guess most of us know who Michael Saylor is. And here it's like a disclaimer that this is not financial advice and everything like that, which is true. Even my video, you should not consider it as financial advice, only as educational reasons. So if we go to the first tab, which is the BTC tab here, we just zoom out a bit, and we just look at the assumptions as a first step. So the assumptions here, the first assumption is that Bitcoin price in 2024 is $65,000, which is a fair assumption. This is kind of the average of the year so far. And here, these are the predictions that the creators of this model about buy. So these are also their assumptions. They're saying that the 2025 ARR, the revenue for the first year after this model, will be 50%, and the revenue will be reduced by 2.5% on average until it reaches a steady state of 20%. So this is the base case. We have the bear case, which is slightly lower, or the starting point is half. And then, because the starting point is lower, the reduction rate will be lower, and the steady rate will also be lower. And the bull case is the other way around. The starting point is higher, the reduction is higher, and the steady rate is higher. And you can see here, we are choosing the scenario that is base scenario, and these are the outputs of it. So if we go by the base scenario, we start the year by $0.07 million or $65,000, it's a rounded number. We end up in 2045 at $13.4 million. So this is what Saylor talked about in his talk during the Bitcoin Nashville conference, that by 2045, Bitcoin price will be $13.4 million. It's based on this ARR, which is starting 50%, reduction of 2.5% every year, until we reach a steady rate in 2037 of 20%, and then we stay at 20% until 2045. Just a quick reminder, these are just averages. So these are the averages of the ARR throughout those years. It doesn't have to be exactly 50% or 47% for this model to be correct. It's more like an average, and if it's somewhere close to it, then your prediction is probably more or less accurate to a certain degree. Now, how to work with this model? If you downloaded it, you just change, if you want to look at the output of every scenario, just change here to, for example, bear case, and the outcome will also change, of course. We will have, by 2045, $3.2 million per Bitcoin. You can also look at this data on this chart if you prefer looking at charts. Same thing. You can also change it to the Saylor's bull case, and we will have a whopping $40.2 million in 2045. So this is how you work with it. But you can also change the assumptions. So maybe to you, 2024 will be at an average of, I don't know, 70,000. So all the assumptions change. If you keep it at 65,000, maybe your own predictions are different. Maybe your base case is 60%, reduction rate is 3%, and steady rate is 22%. We should be able to change this. So yeah, you can just, the idea is that you can change all of this. We're gonna just stick to his assumptions, and we're gonna work with the base case for now. And in this part of the tab, you can also see the same, the outcomes, but summarized by until 2045. Also by market cap, if we're taking the base case, we will have $281 trillion market cap for Bitcoin. Bull case is 1,000 trillion, and bear case is 68 trillion. So this is how Saylor predicts Bitcoin price, and it's his base case. Now, if we move on to the macro tab, this is important, and this is where the assumptions really, you can just play around with the assumptions, because you're not only working with assuming the Bitcoin price, you can also work with assuming gold, art, equity, real estate, bonds, and currency prices. So the reason Saylor has these traditional assets here, because usually when a new person is getting into Bitcoin, they're trying to compare it with other traditional assets and how well will Bitcoin do compared to those assets. So here, there's many assumptions. First of all, we're assuming the macro inputs, which are inflation and innovation growth. So according to Saylor, we'll have an average of 6% inflation growth. So if that was me, I would change that. I think inflation should be higher than that year on year. I have my own assumptions to work on them. That's essentially how you should be working with this sheet. So you may have your own scientific reasons to believe that inflation growth will be 6, 7, or 8, or 10%. For me, I believe it should be around 8%, the inflation of the US dollar. And if the inflation is higher, that means the innovation growth, or probably we can say the growth of the economy, will be at 4%. And here we have to work with these assumptions, the monetization assumptions. So what does monetization says? So monetization refers to the incremental year-on-year growth of an asset's market cap over and above the inflation growth and innovation growth. So if we're assuming that inflation growth is at 8%, and inflation growth is at 8%, and innovation growth is at 4%, how much would gold grow in comparison to that? So what Saylor is assuming here, he's assuming that gold is gonna grow. It's not gonna grow. It's gonna shrink compared to the inflation growth and innovation growth. I kind of believe that that's the case, and that has been the case for quite some time. But since I increased the inflation growth, I will decrease the demonetization rate, and it will be at -3% for gold. I think art will be less relevant and less monetized, so I'll go with -1%. Again, these are not really that scientific. You may have your own scientific reasons to change these. That's the whole point of doing this exercise. I think equity will go to by 1.5% because we increased the innovation growth and the innovation growth by slightly a bit. I think demonetization of real estate will stay the same. Bonds, I would say it will be at -3.5%. And currency, it will be at -1%. That's how I see it. These are my own assumptions. Now, when we go to the asset dilution, which means that how much each and every one of these assets will grow in terms of supply, these are more or less, we can take them as factual because, for example, gold growing at 1.75%, that seems possible, and that has been the case for quite some time. Art at 1.25%, I'll accept that. Equity at 1%, real estate at 2%, all seems fair. But maybe because we have higher innovation growth, I would go for maybe 2.5% real estate growth. But if that's the case, then maybe I'll demonetize gold demonetize real estate by 2.5% as well. So I'll go with that. These are also kind of set in stone. Maintenance cost for something physical is at 3.5%. I would lower it to 2.5 because we have growth and innovation. Inflation cost at 3%, I'll keep it at that. And digital maintenance cost is at 0.1%. Naturally speaking, to maintain something digital is way, way lower than something physical. So it's 0.1%. That sounds a bit fair to me. So these are the results here that are going to be based on our assumptions. So how will Bitcoin do compared to all other traditional assets? So if we take the base case for Saylor, we will have Bitcoin CAGR at 29.2%, gold at 9% with adjustments in the assumption, and art at 11%, equity at 13.5%, real estate at 9.5%, bonds at 8.5%, and currency at 11%. Again, these are changed because I changed the assumptions, but if you want to stick to whatever Saylor already had in this model, you can just download it yourself and look at the model and see what exactly Saylor is predicting, like what are the results of Saylor. But those are my results based on my assumptions. But as we said, you can also change these assumptions. You can change your base case to the bear case. You can just have a completely different set of bear, base, and bull cases, and that will be affected here. So moving on from this tab to the interesting part of this model. So this model, as we said at the beginning, is divided into normie, BTC 10%, Bitcoin maxi, double maxi, and triple maxi. But it's also modeled on five types of market participants, which are the individual, corporate, institution, and nations, and wealthy nations. So we have indebted nations and wealthy nations. So these 5 market participants who are potential Bitcoin hodlers who can go on a Bitcoin standard, these are, this whole model is modeled on them and what they can actually achieve from it. So Saylor here is taking the regular individual, probably some guy who is well into his career, maybe in his 30s and 40s, and have this set of conditions that we see here. So first of all, we're working with the triple maxi strategy. So what are the strategies exactly? So we have the normie. The normie is the person who has 0 allocation to Bitcoin. He has 0% of his earning converted to Bitcoin, and he doesn't have any mortgage to buy Bitcoin, and his saving rate is a regular 25%. Again, these are assumptions and you can change them. But what we're saying here is that the average person probably has 25% of his income in savings. And to this guy who's not a Bitcoiner and doesn't care about Bitcoin, he's not going to convert any of his savings into Bitcoin. And he doesn't have any Bitcoin. And of course, he's not going to take any mortgage to buy Bitcoin. Now, what about the Bitcoin 10%? This guy heard about Bitcoin and he just wants to hop on the train. He's not a Bitcoin maxi, he's not a Bitcoiner. He just wants some kind of allocations, which is 10%. His excessive earnings are converted by 10%, and it's a steady saving rate of 25%. The Bitcoin maxi has a way bigger portfolio allocation at 80%. His excess earning is converted at 80%, and his saving rate is 25%. The double maxi, in this case, he has full allocation to Bitcoin. He's all in, 100%. But he was also taking mortgage to buy Bitcoin, and his saving rate is 25%. Now, the triple maxi, same as a double maxi in terms of allocation, but he's taking a double mortgage to buy even more Bitcoin. And this is interesting. This guy even went as far as left his jurisdiction to pay less taxes. So he cut his taxes by half, and now he has 50% saving rate. So what are the assumptions here? We're taking a person, probably a person in the Western world, in a developed country, in probably United States, Canada, UK, somewhere in Europe, Western Europe. This person has an assets of $1,000. We're assuming that he's starting with 0 Bitcoin and he's a triple maxi. So what happened in this case? If he has $1 million in assets, and they're divided in this way, he has 30% in equity, 50% in real estate, 15% in bonds, and 5% in currency. And he has a mortgage of $250,000. The cost of the mortgage is 5% year on year. So these are the results for this triple maxi with $1,000 in assets other than Bitcoin. And he wants to get into Bitcoin by going all in basically. So how does this happen? He has an excess earning of $100,000 per year, and he allocated all of that into Bitcoin, which is 11.5 coins. And then the number of Bitcoin now he has, so at the price of $65,000. And now he has $750,000 in Bitcoin. If he's going to use 100% of his excessive earning to buy Bitcoin, by the year 2025, he will have $1,230,000 in Bitcoin. And by the year 2045, based on the base case, he will have $213,000, $213 million in Bitcoin. So this is the case for a regular individual who is a triple maxi. Now, I want to change this, and I want to create a new one and call it, so we create a new tab with the same information. I'm just going to change that rename it individual, but 0.2. This individual is a 0.2. He's a regular individual. He's not from a wealthy country, and he doesn't have that much of an excessive earnings. And he's not a triple maxi because he's just a Bitcoin maxi, because he doesn't have access to mortgage or anything like that. So he's a Bitcoin maxi. He has 8% allocation to Bitcoin. He doesn't have $1 million of assets. He just has maybe $50,000 in assets. So yeah, let's say he has 95% in real estate and 5% in currency. So this guy has some kind of a house or a land that he inherited somewhere. So he has $50,000, maybe a bit more, let's say $100,000 in assets between his real estate and his currency. He doesn't have any mortgage, so that's not what he's doing. And he's an 80%er, and let's say because he lives in a maybe not developed jurisdiction, he only pays 50% in income tax. And his earnings, let's just say he earns 30K per year, and earning growth per year is 5%. That sounds plausible. So what does this guy has? So let's say he purchased for the first year 0.2 coins. So he has 0.2 Bitcoin, and he will be basically the excess earning that he has, which is 25% of the 30,000%, he will invest 80% of that into Bitcoin. So by if he starts in 2024, and we go by Saylor's base case, by the year 2045, if he keeps doing that steadily and increase his Bitcoin count by 4.1% a year based on 25% and 80% allocation into Bitcoin of his saving rate, he will have a 28.9% CAGR year on year, and his Bitcoin stack will grow by 4.1%. He will have 0.5 Bitcoin in 2045, and he will have $6 million in net assets, or $6 million in Bitcoin specifically, and $380,000 real estate. So the land that he owns or the house will grow by this much, and it will have a value of $380,000, and his currency will be $66,000. And that's it. So basically, just taking 25% of your earnings and investing that in Bitcoin, and starting at 0.2 Bitcoin today, because this is the number I like to use always in my videos for someone who's starting new and just a regular individual and who wants to start allocating into Bitcoin, this will be the result. Now, if we change that, we keep the same much assumptions, but we change the strategy to only BTC 10%, it's still not bad. You will have half of what you would, so you'd have $3 million by 2045. So it's not 6 million, but you would be investing less, which is 10%. Now let's say this person doesn't want to play this game, he doesn't like Bitcoin, and we just say this person is a normie. So a normie in this case will have 0 coins. He will only have $700,000 in net assets by 2045. So he's instead investing most of his money in currency or in real estate, and that's what he has, not more than that. So that's the situation for an individual 0.2 Bitcoin. Now, if he somehow has access to mortgage and he wants to be a double maxi, and he starts by 0.2 coins, and at a mortgage of, let's say, I don't know, $50,000 based on what he has. So it will be increased by a bit. Instead of ending up with 6 million, he will have 7 million. So unless you have access to getting a huge number of mortgages at a low cost, 5% cost is pretty high, it's not that worth it. So it's just a headache for nothing. Let's say he's a triple maxi, then yeah, he's even taking more mortgage. It will be at $11 million by 2045. So the whole point of this is for you to work around with it. It's really fun and it's really interesting to do it. Now, I want to skip over these other tabs. They basically work the same way, but we're talking of bigger numbers and more complicated balance sheets when it comes to a corporation or an institution. They have probably a bigger set of assets that they invest in. I want to skip ahead into an indebted nation. So Lebanon is basically an indebted nation. It's around $80 billion in debt, or maybe even $100 billion. Correct me on that. So I'm going to work with this one to talk about Lebanon as a country, and let's call it indebted nation. Move our copy. Let's create a copy. Indebted nation. Let's call it indebted nation Lebanon. So what does that mean? The assumptions here are a bit similar in terms of like the same strategy. You can be a normie country, you can be a BTC 10% country, or a maxi or triple maxi or whatever. But the assumptions here can change. So let's say a country like Lebanon, let's say it wants to take triple maxi strategy, and it starts at 0 coins, right? As far as I know, the Lebanese government doesn't have any Bitcoin. It has around, let's say, 7 billion in revenue per year and 12 billion in expenditures and 100 billion in debt. Cost of debt, let's say, it's 7%. And they have assets at $80 billion. I would just reduce that to $10 billion. I don't know exactly how much, but let's just say $10 billion. What do they own as assets? I know that Lebanon has quite a lot of gold, so I'm just going to go with 70%. They don't have any equity, and probably they have bonds. Pretty sure they don't have any bonds. So I'll just leave that. I'll just change that to real estate. Let's say they have 30% in real estate. Okay, and we change that here to real estate. So this is the allocation of the Lebanese government. Let's say they want to take the Bitcoin maxi strategy, triple maxi strategy. So revenue growth, it will grow by 10%, but let's say the expenditure growth will grow by 12%. They will most likely keep spending more than they're earning. And I would lower that to 9% because it's the Lebanese government and it's not that responsible, and it's not very good at tax collection or anything like that. So in 2024, they have 0 Bitcoin. If they take the triple maxi approach and they go 100% in Bitcoin, and they have a conversion program year for 4 years, so in 4 years, they're gonna keep buying Bitcoin. That's what this says. And it will start in 2025. So by the year 2024, they have 0 Bitcoin. The Bitcoin price is 65% based on the first tab here. In 2025, if they start buying, it will be based on this formula and 100% allocation and how much debt they're getting into to buy Bitcoin, which is 20% of its revenue, which is, again, only $7 billion. So out of the $7 billion, we're getting 20% debt to buy Bitcoin. And so we have 41,000 Bitcoin bought by the Lebanese government. By the year 2025, we would still be in debt. We would be more in debt. Instead of being at $102 billion, we would be at $115,000. Even by the year 129, we will still be in debt. But by the year 2045, we will be at $254 billion in net assets. So that means that not only using Bitcoin, not only the government, Lebanese government, can keep that expenditures higher than their revenue, have $100 billion debt, starting debt, and at a cost of 7% of that debt. If they only have $10 billion in excess assets, they will still be able to, by the year 245, by even taking more debt to buy Bitcoin, to be at a net asset, positive assets of $254 billion. And these are based on the base case scenario of Saylor's assumptions. If we change that to bull case, and we go back to indebted nation, we'll be at a whopping $3 trillion in net assets instead of being at minus $100 billion. This is how amazing it is. So if you're a politician and you have some kind of a influence in bringing your own jurisdiction into a Bitcoin standard, you should probably act on this, honestly. I mean, all of this can change based on these assumptions because this is the key part. We don't know what could happen here. And this is essentially the needle, what could change the needle. But I mean, the base case seems possible. We've been growing at 100% for the last 13 years. Here, this is saying that we will grow at 50% and deducting 2.5% from now until 21 years later. So maybe you should look into this, honestly. If you're an indebted nation that you can still get into more debt, it just makes a lot of sense to buy more Bitcoin, to have a Bitcoin strategy. Now let's say the country wants just to want to be a BTC maxi. It will not really do well because it will not have access to more revenue to buy Bitcoin. It will be practically impossible. So the first year you would buy 17,000 Bitcoins, but in the next year you will not have any revenue to do so. So you need to actually get in debt, unless you somehow become more responsible as a nation and you have excess revenue at 15 billion, let's say, and your revenue grows at 15%, then yes, your revenue is growing bigger than your expenditure, and you have a revenue higher than your expenditure, then yeah, you can pull off the BTC maxi strategy. But if you cannot do that, and you can get into that, then the triple maxi strategy, or probably even the double maxi strategy, would work for you just fine. So this is it for this video. I just wanted to bring attention to this model and invite you all to tweak around with it, play around with it, see what works for you. For most of us, we will have to focus on this tab because we're not a corporation or an institution or a nation, so we don't really have to care about this part. But it's still fun to play around. And yeah, this is something that you can kind of base some of your expectations on. You can tweak it. All the formulas are already set in stone for you. All you have to do is think of it from your own perspective and from your own subjective valuation of things, and how much you earn and how much you spend and how much you're willing to save or take on debt, and do this calculation. So that's it for this video. If you enjoyed it, please like and subscribe. Give me your feedback in the comments, and yep, that's it. Thank you all for being here, and I'll see you in the next one. Goodbye.